Welcome back to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We are talking about your taxes and my taxes, something that we love to take up every spring.
Some do, really.
Do they really?
Like you said, they look forward to that refund. I have people, it's like, can we do taxes yet? They're just ready to come in and get their money. And then others, they're really afraid to, that they got to get it done by the 15th. We talked about extending, if you have things going on in your life, a lot of people have stuff going on, health things, family things,
Sure.
business things, you extend.
So, I've heard of extensions.
Yeah.
People do,
Many people do
there's
it.
no penalty
We
for
do.
that?
Well, depending on how much you paid in.
Okay.
You got to, pay in, get your money paid in.
Okay.
If you don't get a certain percentage in, there's a penalty. It's not ridiculous.
Okay.
It's not worth you stressing or having a stroke over because you're panicking of getting your taxes done. It's not that big of a deal to extend. Then you get 6 months. You get to
Okay.
October.
All right.
Don't be afraid to extend. Talk to the CPA, see if you
Sure.
have to send a check in or whatever.
Right.
But all you got to do is just say, extend me. That's it.
Okay.
And the CPA will extend.
Wow.
Yeah.
I never would have thought about that.
Mm-hmm.
Now, when we talk about this new tax law, you mentioned this in a prior segment, something about the deductions, but they have changed a lot. Like we said, reimburse employment if you are still employed, and you used to do mileage reimbursement, things like
Mileage,
that.
entertainment, now. I used to write off entertainment and stuff. So, yeah, those rules have changed. So if you're self-employed or a small business owner, you were affected more so.
Okay.
Most folks, average family, W-2 employees, you were affected in a positive way. As long as they didn't change your withholding too much.
Okay.
You're going to pay less tax than you did the year before, apples to apples, because
Well, that's encouraging.
Oh yeah, it's the standard deductions much higher, and your tax rate's lower.
Okay.
So the 15% is now 12, the 25 is now 22.
Wow.
So 3% on taxable income, that's sizable.
Right. I would rather have me have the 3% than them to have the 3%.
Oh yeah, exactly. So yeah, for most people, you're in a better situation, apples to apples.
Sure.
You're paying less tax this year.
Now, as we go forward, Wayne, I have limited knowledge on this tax plan that went through, but my understanding is it's only sort of temporary. There's parts of it that only last like 3 or 4 or 5 years, something
Right.
like that. Is that correct?
Yeah, until they make it permanent, if they make it permanent.
So every year we are going to have changes in this?
I don't think so. I think it's pretty much assumed that it's going to be extended. I shouldn't say
We're
that.
dealing with Congress, Wayne.
Yeah, we're dealing with two different parties. So
Right.
if Trump loses in 2020, taxes will most likely go up. So they're talking about going up big. The AOC,
Oh yeah, 70%
Alexandria,
on business
right,
owners,
right. So but typically they'll raise taxes on everybody. They'll just really hammer the high high net worth folks.
Right.
So take advantage of the lower tax rates now, even by getting proactive and potentially doing Roth conversions now.
Okay.
Or stop putting in traditional 401ks, stop putting in traditional IRAs, and utilize your Roth 401k or your Roth IRA. So we don't get the tax deduction, but we get the money into a tax-free account for the rest of our lives.
And these are the things that I like, as you've talked through about these through the years, is you help folks put together a plan to both ensure good retirement income, minimize your tax liability. The liability is still there, but there's ways to work.
But what we're doing is minimizing future tax liability using that scenario. So that's a choice that I talk, through with people. We got to, what is their priority? Is there a priority to pay less tax now, or is there a priority to have, multiple tax-friendly incomes when they're retired? Some don't care about retirement. They're like, save me money right now. So we have to do the traditional 401ks and traditional IRAs and HSA, everything that we can get a write-off now for. Others are thinking, hey, I'm in a 12% bracket. That ain't going to be around forever.
Right.
I better take advantage of it. So I'm going to load up my Roth 401k and my Roth IRAs. I'm going to do Roth conversions. I'm going to pay the tax early at a low 12%, so I can now have tax-free money for the rest of my life. So when you put money in a Roth, you're paying tax on the seed. Okay? When you put money in a traditional IRA or 401k, you're going to pay tax on the crop. So you get the tax deduction on the seed.
Okay.
Right? You write off your deposit into your IRA. You're going to pay a tax on whatever that grows to down the road.
Okay.
Roth is opposite. You're going to pay tax on the seed. The crop is tax-free.
Which makes much more sense.
Well, yeah, if you're willing to write a bigger check now to the IRS.
Right.
Most people want the discount now. They want to pay less tax now.
Right.
But there are people that understand that whole thing and say, hey, I'll bite the bullet now so I have much tax-free, many tax-free assets or dollars in retirement that I'll never pay tax on again.
Sure, absolutely. Well, friends, if you call that phone number, 866-626-3990, Wayne has a great deal, $90 tax-prepared, CPA prepared. Wayne will sit down with you. It includes everything, right?
Right. All your returns, state, federal, local, the whole bit.
And you'll help them put that plan, help them minimize that.
Well, then they become clients, and now we're in the loop with everything. We talk planning, we talk investing, we talk retirement, we talk income, and we do tax planning to boot.
Absolutely. Pick up that phone. We'll be back right after this. 866-626-3990.